On behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to the Torres Report. I am your host, Todd Schoenberger, and joining me today is the legend himself, José Torres, who is a senior economist at Interactive Brokers. Jose, we got breaking news. The Fed just came out with their announcement. Can you tell us what they have?
Absolutely. So the Fed is choosing to maintain its rate where it is at the midpoint at 350 to 375 range. The Federal Open Market Committee, I'm reading here, just came out, folks. Good afternoon. Is firmly committed to fulfilling its statutory mandate from Congress of promoting maximum employment, stable prices, and moderate long-term interest rates. The committee seeks to explain its monetary policy decisions to the public as clearly as possible. Let me just see here. These are some of the regular talking points. Let's look at some market action. We had the S&P jump to a fresh record today above 7,000, 7,002 before retreating to the flat line. Right now, we're at the flat line again. Rates are a little higher here, however. The 2-year is up almost 2 basis points at 359, almost 360. And the 10-year is up to 427, 30-year up to 488.
So what's your take on that knee-jerk reaction, though, on the rates? I mean, because the Fed, as you know, controls short-term rates, not on the longer end. So what's your take, though? Why is the bond market reacting this way?
Yeah, I think that there's an expectation that the Powell presser may be a little hawkish. He may dismiss some of the questions from reporters when asked about independence from the White House, as well as political pressure from the Oval Office to bring down rates expeditiously. Also, Chair Powell, his term ends in May. However, his term as governor ends in 2028. So I'm sure there's going to be a question or two about whether he intends to remain on the committee. Of course, that position means that he would be a voting member up until 2028 and influence policy.
Right. And I see that we do have markets actually are sliding right now. They are headed south based off of the number itself and the announcement. Plus, so everyone knows, when the Fed releases the announcement, they actually have a press release that goes with it. And that leads up to the 2:30 press conference. Jose, with the 2:30 press conference coming up, are you expecting any big surprises, though? I mean, I would like to know the dissents. I would like to know where we stand as far as the committee itself. Was everybody unanimous? Likely not. We had 4 dissents in the last meeting. I'm going to suggest that we're probably going to have a little bit more of that jockeying, only because a lot of these governors are still going to be looking for a job. So who knows who the next leader is going to be. What do you think, though, with the press conference? I mean, it's probably going to be a lot less about monetary policy and a lot more about all of the drama that's going on with the Fed. But what do you think?
Absolutely. And it's 2:03, folks. So the statement just came out. To answer your previous question, Todd, Governor Stephen Miron and Governor Christopher Waller dissented. They preferred to lower the rate by 0.25 percentage point this meeting. So, in previous meetings, Governor Miron was more dovish. He wanted deeper cuts. He wanted 50s. And this time he only wanted a 25. So that's a change there. So we got 2 dissents this meeting. The committee uncertainty about the economic outlook remains elevated, and the committee is attentive to risks to both sides of its dual mandate. I think the fact that Miron dissented in favor of only a 25, Todd, I think that's what's giving rates a little bit of a bump to the upside, because that's the most dovish voice in the committee. And there is speculation that, he had a former job with the president at the Council of Economic Advisors. So there's speculation and there's a perception that he's doing exactly what the president wants. Of course, the president probably would have preferred a move more than just 25 basis points. So the fact that Miron stuck to just 25, I think that's leading to modest losses here in the Treasury complex. As far as the press conference, Wall Street's attention, like you said, Todd, has been all over the White House shenanigans, the investigations against Chair Powell, against Governor Lisa Cook. I think that now we're going to focus more on other things, on growth, on employment, on prices. Prices are doing okay. They're still above the target. Jobs are very tricky because you have decelerating payroll growth, Todd, that's frankly very weak against the backdrop of immigration restrictiveness. So traditional economic indicators are having trouble really informing the public and economists about this historical discrepancy where you have a reacceleration in growth. Third quarter was the strongest in 2 years. You have inflation that's still above target. Markets are buoyant, yet you have payroll growth that's very muted.
Right. And a couple of things there. One is that the Fed really can't do anything about affordability, though. And we know that. So that would actually probably come from the White House. I get the inflation argument, but that's on the hiking cycle. I would have to think, though, with Stephen Myron, does it surprise you that he would only say 25 basis points? He knows where the committee is heading. He's put in there to be more dovish. I'm actually kind of surprised by this. It does give the feeling, at least I know bond traders are going to be thinking, that is this what the future is going to look like? Because even if you get a Rick Reeder in there or someone else that's really, you're expecting more of a dovish stance, we might not actually get that right now. And I'm anxious to see what the chairman says at 2:30. I mean, what are your thoughts about that? I mean, why not just go and Myron should just be aggressive? Wouldn't you agree?
I think that a 20, honestly, I don't think that a 50, there's much argument for a 50 basis point here, Todd. I think 25 is okay, but I think that him deviating from those deeper cuts and going for a more modest cut in standing right next to Waller in favor of a 25, I think that is a more hawkish development overall. And when you look at the candidates, why is the president, Todd, why is he taking so long to nominate the Fed chair? Because he's scared that he picks somebody, and then when they get in there, Kevin Warsh is a hawk, Todd. He wants high rates even when inflation is low, right? So you have some of those issues because, in the Republican Party, you have a lot of monetary policy hawks, those fiscal hawks, those rate hawks, those people that essentially want to instill more discipline in the financial system. President Trump is a real estate guy. He wants low rates all the time. So it's having trouble here between Hassett, between Warsh, and between Reeder, because Reeder, he may be the most dovish and the most capital markets friendly, but when is he may be independent. He may have a mind of his own when if and when he's nominated.
Well, the president gave us a little bit of a hint to how complicated the hiring process has been, only because he's afraid that all of these candidates are just going to tell him what he wants to hear. But then once they get into the job, they're not going to be cutting that aggressively. And therefore, you're going to end up right there again on the hot seat, just like Chairman Powell is right now. It does make you wonder who wants the actual job actually at this point. But Rick Reeder, he popped up, a week ago. Nobody even heard of this guy, unless you're at BlackRock, of course. But now all of a sudden, he's the front runner for that position. Do you think, though, if he does get in there, what justifies rate cuts at this point? You have jobless claims that are under 200,000. The labor picture is not fragile. I don't understand where this feeling comes that we need to have rate cuts. But are you seeing something the rest of the public is not?
Housing, Todd, housing. So the shelter lags, shelter CPI lags housing, and we're having a lot of housing price weakness, a lot of rent weakness across the country. Some people say that, some sources say that housing inflation is down to 1%. So the CPI is really at 1.8 or 1.9, and that's really the argument. That's what Myron brings up. It's the housing argument. Why? You don't have household formation. Our demographics, our births depended on open borders, on immigration flows. We don't have open borders. We have immigration restrictiveness. So we don't have that strong population growth that can really drive increased prices for homes and or for rents, especially with mortgage rates still well north of 6%.
North of 6% and going higher, actually. We saw mortgage rates actually creep higher going into this week. And that doesn't bode well, especially with what is known as the hottest housing season, which is spring. So you really hope that we do start seeing rates come down, but we have not seen it yet. If you're there at the press conference right now, Jose, you're there, you got your coffee, you're hanging out with all of your colleagues. What's the one question you're going to ask Chairman Powell?
I'm going to ask him a question that I'd like for him to answer, because the one that I actually want to ask is not going to have an answer, because the chairman does a great job of deflecting and staying on focus. So I would ask him about the balance sheet plans. We're starting to expand the balance sheet. We had some issues in the banking sector last year. The repo facilities started being used, meaning that banks were there was a scarce cash at some financial institutions. So we shifted from the reverse repo, where we have a lot of treasuries and not a lot of cash, to the repo facility, where we have not a lot of cash, but a lot of treasuries. So now we're starting to support that market, the Fed is. And, what's the dynamic going forward? Because, Todd, if we start buying treasuries at the long end, then we're talking about a more comprehensive, a more augmented quantitative easing program that will bring down long-term yields if enacted, similar to Japan. Of course, that brings medium to long-term problems that it's not appropriate to talk about here, of course, but I think that's what the president wants. Quantitative easing, lower the front end, lower the long end, lower it all.
Right. Quantitative easing is back. That's great. So here's the final question I have for you, because markets right now are just level right now. And it's obvious that everyone is waiting for the press conference, but also we need to have a clue as to who's taken over as chairman. After all, in 4 months, we are going to have a new chairman of the FOMC. So right now with markets, are you expecting any movement whatsoever? Or do you think investors are just going to remain on the sidelines until we finally hear what who the president's going to pick?
I think we stay flat in markets from here. Also, remember the yield move to the upside. We have a 4-month high in crude oil because of geopolitical tensions flaring up in Tehran. So that's also lifting yields up. I think really the move in markets, I think markets stay flat up until 4 o'clock. Once we got big earnings reports. Of course, this program is about the Fed, but we have 3 of the Magnificent 7 names reporting after the bell. That's Microsoft, Meta, and Tesla. All eyes on AI. What are the spending plans? How much is it delivering to the bottom line? Investors are more in a wanting to see the cash mood lately. Stocks could get punished if they tell shareholders, hey, you got to wait for the buoyancy of earnings to come through, because we're not there yet. Investors, it's been a 3-year bull market, and they want to see the profits from AI. And there's going to be some bifurcation between, of course, the semiconductor manufacturers, the memory producers, and of course, the big tech names that deliver the products to the end, products and services, that is, to the end user. So that's really what's going to be on folks' mind. If the numbers are blockbuster, but the bar is high, then you're going to have the S&P trade above 7,000. If the numbers are so, the bias here, in my opinion, is to the downside.
Okay, so final question for you then. So here we are. We have another Fed meeting, not until March. So are we going to have the pick for Fed chairman by the time we get to the next Fed meeting? What is your Polymark or your prediction site telling you at Interactive Brokers?
So our prediction market is we have, of course, we have Warsh, and we don't have the dates, unfortunately, as to, will President Trump nominate a Fed chair by this date? However, that could be a contract that could gain popularity. I may have to propose that later to the committee. We don't have that, but you know what? I think by the March meeting, I think we'll know.
Okay, well, I hope so, because I know markets are waiting, so we'll see what happens. Well, it looks like everything's going to be remaining a holding pattern right now. We are very flat in the markets for everyone, and this leads up to the 2:30 press conference, and we will have more then. Jose, this was great. I know you're very busy on Fed Day. I appreciate you joining the show. Obviously, it's your show, so this is great, and we'll be back next week at 2 o'clock live Eastern time on Wednesday to really digest the data plus the press conference, and we'll have a few more surprises for you as well. Jose, enjoy that press conference. I know you will.
You too, Todd. Great to be here, and I'll see you soon.
Sounds good. All right, so on behalf of Jose Torres, I am Todd Schoenberger. Thank you once again for joining us on the Torres Report. We'll catch you next time. Take care.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.